Hello, everyone. This is Sasha with the LTRC. Thank you for joining us for 5 ways your law firm's inefficient processes are slowing growth. With our sponsor, CosmoLex, as part of the LTRC Industry Insight Series held every Wednesday. Our speaker today is Erica Bursler. Erica is the Vice President of CosmoLex, developers of the only fully integrated case management, billing, and complete accounting system specifically designed for law offices. Erica's degree is in business administration, and she has nearly a decade of experience in the legal software industry, catering to the specialized technology needs of small to mid-sized law firms. Erica is passionate about helping legal professionals improve the way their law firms run, and she has given numerous presentations across North America on legal technologies such as law practice technology management, cloud computing, and legal billing and trust accounting compliance to help spread her knowledge.
Thank you so much and welcome everyone. I appreciate you joining today. So a little bit of what we'll be covering in today's session is all about kind of law firm operations and specifically the financial side, what makes the financial setup of a law firm a little bit unique. And more specifically, the 5 common challenges that law firms face depending on their setup. So we'll talk a little bit about how your financial data entry, workflow, et cetera, is set up as well. And then lastly is how technology can really help you with that. And at the end of the day, the better and more streamlined your financials are, the more growth goals, hopefully profit, you can accumulate with your business. So the first thing I want to talk about is legal practice management as a whole. What are we referring to? I tend to divide it into 2 buckets. One is your front office. So this is a brief list. There could be many other things, but it's basically what you do to interact with your clients. It could be your appointments. It could be your phone calls, your different activities and tasks that you need to do for your client, the communication between yourself and your client. It's a lot of that face-to-face front-end interaction of your business that your clients deal very heavily with. And then you have your back office. This is kind of your administrative work, your tracking of your time, billing to your clients, managing retainers and your overall accounting. And a lot of focus tends to be on front office, especially from a software perspective, because that is where most of your day-to-day activities take place and how you accumulate a lot of your billable work. But what's interesting is your back office is how you turn those efforts into income. So if you do all these activities, you have these appointments, these phone calls, you complete these tasks, they mean nothing unless you get paid for them and hopefully collect on all of those activities. Another point is the back office work is often non-billable work. So efficiency while maintaining accuracy, because of course you need to have accurate financials for your business, those are all incredibly important and they factor into just growing your business as a whole. So we're going to be focusing a lot on the back office side of your business today. When we talk about back office, we're referring to a lot of that billing and accounting or just overall financials. And here's a list of different activities that encompasses. Now, you yourself may do some of these, like I'm sure all of you are involved in time entry in one way or another. Some of these you may not get involved in, like we have accounts payable and tracking your firm expenses and reconciling your bank accounts. We could have a variety of different people on the call today as to what you're involved in, but in some way, shape, or form, somebody in your firm or somebody that you work with is taking care of these activities. So what I'm curious to know is, how is this, if at all, cohesive? How is this working together? What types of tools and processes are you using to make sure, again, you're maintaining efficiency, but also accuracy of your overall business financials? So Sasha, if you can go ahead and launch that poll. We are shooting up a poll right now, which you should see, which basically asks, what are you using to manage your firm's financials? So think of, generating your financial reporting, maybe reconciling your bank accounts, how you get prepared for tax time, everything associated to your financial success as a business. We have written records, spreadsheets, a general accounting software, legal specific software, or maybe you don't know. So we'll leave that up for a short bit. Okay, so as you can see, the results are now up on the screen. We have about 50% of you are using a generic accounting software like QuickBooks, followed by 25% spreadsheets and 25% a legal specific accounting software. So interesting. I'm not surprised. I do think that by far, when it comes to business operations, generic tools like QuickBooks are quite popular. We're going to talk a lot about how that can impact your growth in your business specifically. So here's an image that I like to talk about when referring to firm financials. Like I said, there's a lot of different activities. Some of them are on the billing side, some of them are on the accounting side, some of them are kind of a mix of both. And how are you keeping this information accurate and hopefully having the best workflow possible? So you can imagine with all those different activities that I listed on the prior screen, tracking your time, your costs, your invoicing, your payments, your collections, your payables, how separating these two processes can create quite a few challenges for your firm. So not only could your records be separate, so for instance, if you're using QuickBooks, which half of you are, you're using QuickBooks for your accounting, you're likely using some sort of practice management tool or legal billing tool for your billing. That's quite common setup. Information has to be exchanged between the two. And we're going to be talking about that. What is that information? How does that accurately get either entered in both places or communicated between both places, and the different challenges that can come with that? So that takes us into our challenges. So let's cover the 5 common challenges to using separate softwares, basically dividing your financials between multiple systems. The first one is decreased productivity. So what tends to happen is when you have multiple systems, and this is for any workflow, whenever you have multiple systems and you're having to enter information multiple times, it's of course time consuming, but it's not just the entry of that information. There also needs to be a checks and balances, even more so with your financials than for something like a task or an event. You know, when you're dealing with your financials and you're tracking, let's say, somebody's retainer or your income, you know, you want to make sure that those numbers are correct no matter how many places they're written down. So it's the entry, but also the checks and balances. And like I mentioned, this is all unbillable. So whenever you're not charging for the work that you do, you want to be as efficient as possible. The more checks you need to do, the more time that eats up into what could be money-making time, essentially. Also keep in mind that if you were to simplify your back office and non-billable activities, that always opens up the opportunity for those resources to be shifted to more billable work. I'm sure you have staff, especially in small law firms, you have staff that wears many hats. There are some areas where they contribute the most value, and there are some areas in which they just do it because they have to. You know, we all have to chip in, do what work is needed. But if we can really reduce a lot of that tedious double entry, that could actually increase the value of that resource that you have and increase their productivity going towards that billable work. The next area I want to talk about is your partial financial picture. So when I think of a law firm's finances, I think of these 3 sections. Your billing, so that's your time and expense tracking, your invoicing, hopefully payments on those invoices. But then you have your matter accounting, and that's very much unique to a law office. You have to track which costs have to book specifically to this person. Are they being reimbursed? What retainers are being held by this person? What has been earned in those retainers? What has been actually applied to these invoices? And of course, any trust compliance reporting that you need to do with that. Then you have your firm accounting, and firm accounting is what every business needs to deal with. Your reconciling of your accounts, your generating of your profit and loss and balance sheet, and other reporting, either quarterly or annually. So you could see that segregating this data could lead to inaccurate reporting. At the end of your whole financial cycle is those end of year reports. You might do them even quarterly. If you're only getting part of the picture, you're going to have to either A, you have an inaccurate report but you have to fill in those gaps saying, okay, well, this information's from program A, this is from program B. Let's see how we can bring this all together. So not only is that something that can be just a time-consuming challenge, but it makes it difficult for you to track against your company goals and your benchmarks. So a big part of growth as a business is figuring out, okay, where am I right now? Where do I want to be in a year, 5 years, 10 years? And what do I need to do to get there? The best way to do that is to set up quantitative goals. Not just, I think I need to do this to get that result. Well, what actually do we have and what do we need to do to change that? And that comes down to measurables, metrics, also known KPIs, key performance indicators. Any business, not just a law firm, any business should have some sort of quantitative measurement to say, how am I doing? What is the health of my business? And you can't just go by how many clients you have, because what if those clients aren't paying you? Then you're not actually gaining a return on all of that new business that you have. So here's an example of a few metrics. Now, there's, I'm sure, many others that can be measured. Also, your firm may be a little bit different depending on if you do hourly work, fixed fee, contingency, a mix of all of the above. But here's a few samples, and I wanted to just kind of lay them out so that you yourself can think of either A, do you already have metrics in place that you need to reassess because many things have changed over the last year? I suggest everybody reassess their goals and their benchmarking. Or have you never even thought of metrics? Have you never looked at quantitative data and you want to start doing that? So some examples here, and all of these, by the way, involve your billing and your accounting because it's your overall financial picture that is needed to get this information. So the first point is WIPs, which is your work in progress versus your AR by aging. So knowing the aging on anything is going to help you to know how your collections is going. What type of activities are you doing to reduce your accounts receivable for those files? WIPs aging is actually something that's helpful to know. Should you bill somebody sooner rather than later? Like, is that unbilled amount getting super, super high? Then when it comes time to bill, it'll be a lot harder to collect. So these two numbers are very much about planning. What am I due to bill somebody? What do they already owe me? And also, what do I have in retainer? Do I have money already on hand that I could apply to this? That could really help with more strategic planning with your billing, which will result in higher collection, which is the goal. You want to earn higher income and eventually higher profits. Utilization and realization by timekeeper. I love these metrics. This is about utilization is referring to how much time or costs is actually billed. So I'll take an example of my employee, John. He spends 40 hours a week doing his job. How much of that is billable, non-billable, and what's missing? Like, let's say he out of the 40 hours, he recorded 30 billable, 5 non-billable, and there's 5 unaccounted for. What's going on with that unaccounted time? Did he only work 35 hours? Or are we doing a really poor job of tracking our time? Because you could spend as much time as you want. If you're billing hourly, especially, and you don't track it, or you don't bill for it, you're not going to get paid for it. So having a good grip on the utilization of somebody's effort and their work is really important. It will also point out if you're doing a disproportional amount of non-billable work, which kind of goes to our second to the last bullet a little bit. That administrative work, the overhead costs, everything that goes into running your business that is not billable, you still want to do it in a proportional way. It needs to be efficient. And if it gets way out of hand, that is cutting into your profits as well. Realization is the collection. So we talked about AR, which is what is owed. Realization kind of just gives you that picture of, okay, we billed for 35 hours at this rate. How much of that was collected? Because at the end of the day, that's all you care about is what was actually earned by the firm. Was fee earned, cost earned? Was it only 50%? Was it higher? And it can change by person. And you might be able to see a trend of each person, how good they are at tracking their billing. And you might even give the responsibility of collections to the individual attorney. We know law firms that do that as well, that say, hey, you're responsible for your collections, get it done. And then you could see kind of how effective they are in that job as well. Fixed fee and contingency fee. I always like to bring this up because I feel like when we talk about productivity and measurements, it's often assumed that I do fixed fee, my work is a lot more simplified, I don't have to worry about that. Not the case, because you still want to be able to know, are you working effectively? So productivity is hugely important with fixed fee, because no matter what, you're going to be charging the same rate. If you could do it in less time, that's even better. But you want to track your time, because if I have my staff working on a case and it takes them X amount of hours, which totals $10,000 in value, and I'm only charging my client $5,000, well, there's a disconnect there. Either we're way inefficient and taking way too much time to do tasks that should be quicker, or my rate is way too low. And we need to kind of balance that out. But you don't know that information, or can't make those decisions without that data. Client costs, what have you incurred for your client? How much of that was billed to your client and how much of that was reimbursed? I think far too often firms don't think about how detrimental poor tracking of costs can be to your bottom line. Because either way, you're paying that out of pocket. If you're not effectively billing for it or seeking collection on it, it's a loss for the firm. So just again, being aware, you might be doing great at this, but you want to have data that actually shows you that, nope, we're doing a good job, we're collecting, or we're not, and we need to change something. Profitability, that goes across the board, no matter what your type of practice is. You could do a profitability by case type, by lawyer, by practice area. It helps you to know where your costs even should be allocated, because I think very often in a service business, we think about fee, which is still important, what fee a person brings in, but there's also costs associated to it. There's marketing costs, there's overhead costs, there's administrative costs, and they might not be proportional for every area of your business. So that's an important point as well. And then overall trends. The longer you track this type of data, the easier it is to see trends. What's the average over 6 months, a year, a few years? Is that where I want to be, or do I want to improve on that? And how can I go about doing that? So I did want to kind of paint this picture of how to look at your information in a quantitative way. It's not just about my profit and loss and how much net income I have. There's so much more that you can do with looking into that information. And by the way, it doesn't have to be you, because I think a lot of people go, well, I don't have time for this. There are programs, like software, as well as consultants that can help you if you want to prioritize that, to help you come up with these metrics and ways to track it. And then you could just take that and run with it. So if it's something that is really important to you, look into that. See if you can work with a business consultant to figure out how to set goals, how to have metrics to go against those goals, and that will help you going forward with your growth. Our third point is data and accuracy. So I think it's important to know, when we talked about all these different financial activities that you do in your firm, where is this, and we talked about duplicate entry, where is this duplicate entry? Where are these areas where the risks lie? So if you're in that situation where you're using either a legal billing or practice management tool with, let's say, QuickBooks or a similar situation, where you have those tools separate, these are the 4 crossover points. The first is your client matter management. So whenever you gain a new client, you have to enter it in any tool that you're doing client activity. So you would enter it in your practice management or billing tool, as well as your accounting tool. You want to make sure contact information, specific requirements, other parties is up to date in each place and always matching. You also have your cost recovery. So I mentioned that metric earlier about, as a firm, you likely pay costs out of pocket. You have a filing fee, something related to court costs that you wouldn't pay otherwise, except for the fact that you're representing your client. So those costs go out of pocket. So I record that in my accounting tool to say, hey, I paid this $100 fee by credit card today, let's say. Who was then going into the billing record and saying, all right, we need to bill this $100 to this client. That needs to be on the invoice, and then we need to track how that's been recovered. There are so many law firms, and I've talked about this topic in the past, I'm sure you can all relate, that they know they're dropping these costs, they just don't know how much. They track it on the accounting side, because On the accounting side, you're reconciling, you'll find things that are missed. But on the billing side, if it doesn't make it to the bill, it's very hard to even realize that if you're not doing it all in one solid workflow. So that's one way. There's double entry. Invoice payments. So again, if you're using some sort of billing tool, you need to record that invoice as paid or payment being applied. And the balance goes down, either goes to zero or it decreases. But what happens from an accounting perspective? It needs to impact your general ledger. There needs to be some fee earned, likely, maybe some reimbursed cost, maybe even some late charges that might be on that invoice. How is that being allocated on the accounting side? And is it being recorded on the right matter for the right amounts? And then trust ledgers. Your trust accounting actually bridges both. The tricky thing with retainers is if you have money on hand that you're looking to apply towards a bill, you will have a client, let's say, that has a $5,000 retainer. And if that's inaccurate, because what does happen is when you reconcile, you find mistakes, you fix those mistakes. If that mistake is not retroactively fixed in your other record, you could actually have trust funds in your billing tool that are not accurate. And imagine the compliance issues you can run into there. You could overdraft without realizing it. You could take money from another client or the wrong client without realizing it, all just due to sloppy record keeping, which is completely preventable. So trust is tricky because it's related to your invoices, but it's also related to obviously the bank account, the reconciling, the compliance reporting that is required as well. So when you're having duplicate information in both of these places, especially for those of you now that have separate systems, ask this question. Figure out and find out, how are we doing these processes now? How are we ensuring that these items are not dropped, or that if there is a correction, how is that flowing through to the rest of our information? Our fourth is with syncs. Likely many of you saying, oh, well, the solution when you have multiple softwares is to just sync them together. And it makes sense. But there's a few things that you need to ask yourself. One is, what data is actually being shared? I think with integrations, there is this assumption that everything I need from product A will go into product B and vice versa. And that's not correct. It's certain pieces of information that go from one tool to the other, and the designers of those integrations decide what those pieces of information are. So you want to have an understanding as to what actually goes from one program into the other. And is it one directional or two directional? I don't believe there's any integration with QuickBooks that is two directional. They're all in one direction because that's just how they set up their APIs. And you should be aware of that. So if you have something going from your billing into QuickBooks, let's say, well, what happens when you're reconciling QuickBooks? You find a mistake and that needs to go back to your billing record. How is that being managed right now, if at all? Corrections made after the fact. Similar to the example that I just gave, if you notice any issues in one record, how is that impacting in the other? Likely it's a two-step process. Very rarely do integrations or syncs take into account changes after the fact. So just be mindful of how your integration, if you do use one, works. And who to contact. It's tricky. I am pro integration for many, many different facets of my life and my business. But if you have something like my transactions are duplicating, or they're not going into the right system, or they're not going to the right matter, like the integration is just putting it in the wrong places, who do you talk to about that? Do you talk to the billing company or do you talk to the accounting company? Likely they're going to be pointing their fingers at each other. So it's a little bit of a different game when you're talking about financials, and you just want to have the answers to these questions. Not saying it's not doable, but I just want you to be mindful of the complications can arise and how would these situations be handled. And the last point is dependence on generic accounting tools. So there are no independent legal specific accounting tools out there. Anything or any program that has legal specific accounting, it's built into a practice management platform. So if you're going to use any tool with an outside accounting tool, that outside accounting tool is going to be generic. It could be QuickBooks, Xero, something of that nature. Now, why is that an issue? I mentioned in the very beginning that QuickBooks and tools like that are the most well-known and highly used accounting softwares across, especially small businesses. But the difference is a law firm. So let's take a moment to define what legal accounting is. And some of this I touched upon throughout the session today. The first is the business accounting. This is what QuickBooks is great at. Any generic accounting tool, this is what they do. They help you track your business expenses, they help you reconcile your bank accounts, generate your P&L and balance sheet, and any other tax reporting that you need. Absolutely. It's fairly generic functionality across multiple industries. Those tools are industry agnostic on purpose. So this type of accounting across the board, great. Where the challenges come in is on the matter accounting. So having a concept of what a matter is, what a matter ledger is, what a trust ledger is, how my payments come in and how they should be allocated per my state or federal guidelines as a lawyer, how should retainers be handled? None of that is taken into consideration. So you need to be mindful of, all right, well, if I have a matter cost, it needs to go to a specific GL account. My trust retainers or my trust transactions have to go to a specific liability account. I can't overdraft on a matter ledger. There's nothing in these generic tools to prevent you from doing that. I need to keep these funds separate and have my specific compliance reporting for these trust accounts, both on the bank level and on the client level. And then lastly is just your overall compliance, which ties into the trust accounting piece. So not only are you dealing with the matter specific activity, but if I were to get a trust audit, how do I produce that documentation? If I have legal specific requirements, whether it be how your chart of accounts is set up or the safeguards that I mentioned, or for your specific area of practice. If you do a specific type of law and you have to have specific accounting, like one example I talk about a lot is if you're in some sort of contingency focus like personal injury or workman's comp type of work, you need to track liens on your settlements. You know, I have money that's owed out to third parties once I receive that settlement, and that's coming out of the trust account. How is that being managed in a tool that's not built for law firms? How are you managing it now? Likely it's probably in a spreadsheet or some other method. So those are the things that I wanted to just bring to the forefront when we think about legal accounting and how there could be challenges with using a generic tool. So let's talk about the tools that most firms, I would say, tend to use. You have your written ledgers, your spreadsheets, your generic accounting software, and your legal specific. This is what we had in our poll earlier today. 50% of you had generic accounting, 25% had spreadsheets, and 25% had legal specific accounting. On the left here are the compliance requirements or what you in general need to do proper accounting for your firm. So electronic records is just helpful right now, especially in the past year, to access your information outside the office and not be restricted from doing your day-to-day accounting. Built-in reconciliation, absolutely required. You need to reconcile all of your bank accounts and make sure that they balance out and you can report accordingly on those. Ability to close your books, which means I want 2020, let's say as an example, I want 2020 closed so nobody can go back to November of 2020 and make a change or add something new. That's a basic accounting function that is required. Legal specific general ledger accounts, so your trust liability accounts, your fee income accounts, your client cost accounts, anything else that you may have specific to your firm, of course, but those are just a sampling. Required matter-centric records. So could you take a spreadsheet and link it up by matter, like break it up by matter? Sure, but nothing's forcing you to. You could still cut that check or do this transaction and not record who it's for. There's nothing saying that you have to. Trust safeguards, which prevent you from overdrafting, commingling. You know, I know so many people that have, unfortunately, they come to me and say, I have this trust account and it's got $20,000, a couple thousand, I have no idea who it's for. It's just in this pool of, I don't know who this goes to because I mismanaged my record keeping. I wasn't on top of it. I hear that quite often. And you're reporting what you need to remain compliant in your state if you were to get audited or to just maintain good standing. And here's how these tools kind of match up to what we're talking about. So what you'll notice is actually left to right is the most flexible solutions are on the left to the most inflexible solutions on the right. When you're talking about compliance, you want to kind of be forced into the proper direction as to how to manage your bookkeeping. So nice visual, keep this in mind. Think about your current setup, what you may be struggling with, or just questions and conversations to open up with your staff to figure out, okay, how can we overcome these challenges to really increase our growth as a business? So that covers our topic today. We would, of course, love to help you grow your business through improving your front office and back office. If you'd like to learn a little bit about CosmoLex, which is a fully cloud practice management solution, go ahead and visit cosmolex.com.
We are going to wrap up this session. One more time, thank you to CosmoLex for sponsoring this webinar and everyone for attending today. If anyone is curious about future webinars, you can check out the ABA LTRC page or follow our Twitter at LTRC. One would also like to thank Erica for presenting today, and you can keep up with CosmoLex at CosmoLex Legal on Twitter. And now we will conclude the webinar. Thanks, everyone.
Thank you so much.